What's up, everyone? It is Leland Baptist with lee-chandler, and today I want to give our local investors here in the Indianapolis, Indiana market a quick update on what exactly is going on here locally. So, for most of us, we all know what Keystone Avenue is, right? So, we've had an office in Keystone a couple times for those of you guys who have visited and stopped by. But in Keystone Avenue, right across the street, there is a shopping mall or outside shopping mall called Glendale, okay? And what most of us know locally is that Macy's, one of our I think it's our only Macy's in Indianapolis, Indiana. Second only, thank you so much. Second only Macy's in Indy. It went out of business, it closed their doors there. So there's a trend going on, if you haven't realized. There's a lot of commercial that is available that is either for lease or that is vacant, right? Or leases are coming due. We've seen in this market that some, not all, some restaurants that are owned or absentee ownership, so basically where the ownership is out of state, we've seen some of those restaurants basically disappear in the night like that. They're gone, right? And so what's happening here is, for example, Kite Realty, who owns that shopping plaza, is actually looking to transform from its traditional open shops to actually 267 units, okay? So that's apartments. Locally in the United States, what's happening is we have prices that are going up. We have inventory that is shrinking or diminishing. And so right now, what I see is more of a supply and demand that's going to flip, okay? So if you notice, or what you will notice is a lot of development will take place in the next year or so, and eventually we're going to have an oversupply of inventory. So what that means for real estate investors here locally is, one, look at the opportunity with commercial real estate for the vacant buildings and see if those buildings can be easily converted into, from maybe traditional retail or shops into that of apartments, okay? Because all throughout America, as the shopping goes more digital with Amazon and so forth, and the Toys R Us's of the world, the Radio Shacks of the world are basically becoming less and less frequent with shoppers, now is a great time to pivot that inventory or that portfolio into more of a living and multifamily space. That's the first thing. The second thing is that there will always be a need, I believe, for any type of shops on the ground, okay? So that's our mixed use, that is our traditional residential that may have four units up top and one unit at the bottom, and so forth and so forth. So those are great opportunities. So throughout, whether it's the inner city, I prefer you guys to invest really in the inner city, okay? Not so much in the outskirts because of the job flow. So as you look at in the inner city and you're seeing buildings that meet that criteria, right? Buildings where there's retail at the bottom and it's vacant, of course. And then there's, an ability to rehab a few up top. Take those opportunities now, all right? We are low in inventory. Think about that. We have prices increasing. Think about that, right? We have low supply, we have high demand. And from checking the news today, it appears, and last week as well, because of our trade wars, it appears that the Federal Reserve is going to make it more desirable to borrow more money. So you take all that into consideration. Now is the great time to get discounted assets, especially distressed assets, before everything else revs up, okay? Because you don't want to be the person purchasing at a high rate or a high basis point with a abundant supply. Want to go ahead and snatch up as much as you can now, develop, change some of those around. Kite Realty right now, for those 267 units, they're going to have to do a lot when it comes to zoning, do a lot when it comes to renegotiating some of those leases that they have with the existing retailers, parking spaces, et cetera, et cetera. When they initially purchased that site in 1999, they purchased it for $20 million. In 2000, they literally dumped $45 million. And honestly, with Macy's leaving, with them having to do a huge build out, that's vacant property, that's vacant space that really can only be use for retail space. So it's in their best interest to reposition that debt, reposition that space into more of livable space that can maximize the value. So nonetheless, makes a quick video for you guys. Now is a great time to get the discounted properties that's on the market. Be ready to reposition them. Be ready to rezone them. It's going to be a huge push, especially for the local Indianapolis market for real estate, to go after those properties. So thank you so much. Look forward to speaking with you guys more. If you have any questions, please visit us at www.lee-chandler.com, and feel free to reach out to me via email at leland, Leland, @lee-chandler.com. Thanks.